I have my thesis that we will see an omega candle, which is a $100,000 candle on the daily, which means Bitcoin would go tomorrow to 160,000. And I just see all the macroeconomic factors pointing towards that happening. U.S. debt is now $3 billion a day. Previously, it was $1 billion increase per day. And interest payments next year are likely going to top 1 trillion on a 7 trillion debt at that time. Who knows? But none of this is sustainable. And at the same time, you have strong Bitcoin fundamentals. You have strong corporate acquisition of Bitcoin by MicroStrategy, by Tether, and others. You have the ETFs, which are still accumulating. It's been flat for the last couple of days, but on net, they're always accumulating.
On January 3rd, Jinan 3 CEO Samson Mow shocked even the most optimistic Bitcoin enthusiasts with his bold $1 million Omega candle price prediction for the leading cryptocurrency. This came after several spot Bitcoin ETFs were approved by the U.S. Securities and Exchange Commission earlier in the year. The subsequent, unexpected demand from traditional institutional investors fueled Mow's confidence. He claimed that this massive demand, driven primarily through the ETFs, would trigger a historic price surge for Bitcoin. Mow predicted that Bitcoin could skyrocket by tens of thousands of dollars in a single day as more institutional investors jumped on the IBIT and FBTC trains. Early results seemed promising, especially in March when the ETFs saw billions in inflows, pushing Bitcoin's price above $73,000 for the first time in history. However, the initial momentum has since slowed, and the price growth hasn't kept up with Mow's original predictions. Despite the rocky few months, Samson Mow remains steadfast in his $1 million Bitcoin prediction, which he believes could still happen in 2024 or at the latest by 2025. In a recent interview with CoinDesk, he pointed to key macroeconomic factors, such as the rising U.S. debt, global economic uncertainty, and Bitcoin's strengthening fundamentals, that he believes make Bitcoin massively undervalued. According to Mow, as these factors continue to unfold, Bitcoin's price will climb closer to his Omega candle forecast, potentially reaching hundreds of thousands of dollars per coin. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
The Bitcoin is a very interesting asset because it is a bearer asset. You can hold it yourself. The supply schedule is fixed, right? Every 4 years there's a halving, and it's like every 10 minutes there's a block. There's not that much to worry about if you're a hodler, or what we call people that hold Bitcoin. So you can kind of put it into cold storage, turn your phone off or your computer off, and just go travel and read books for a year and come back, and you'll see what happens. Like, the price probably will go up. But it differs from things like fiat money, where you have to pay attention. You have to be watching the Federal Reserve. You have to dial into the FOMC meetings and hang on to every word being said. If you're holding equities, you have to pay attention too. So I think it's a very different thing. And as people understand this interesting property of Bitcoin, that you just buy and hold it for long periods of time, more people will start to understand that the short-term price volatility is really a distraction. You're not buying Bitcoin for the gains in the next year. You're buying Bitcoin for the gains in 10, 20 years, which is almost guaranteed. The narratives I hear right now that are kind of just really exasperating are things like, well, rate cuts are coming. And suddenly now people have decided rate cuts are bearish because there could be a recession if there are rate cuts. But, just roll back the clock a couple of years. Everyone was complaining about high rates, and there's very low liquidity in the marketplace because no one has money. So you can't have it both ways. Is it bearish or is it bullish? It's only one or the other. I think it has to be bullish because you're seeing more liquidity being injected into the system. Another one was, what was it again? That historically September is a red month. Bitcoin does not perform well. And there are reports in various news outlets and by various technical analysts saying, Bitcoin could drop 40%. But, we already had a big drop. I don't think you can just go back to analyze historical data and say it's going to happen again. We had a big drop. And the interesting thing about that big drop was the massive influx of buying that came when Bitcoin went to the low 50s. This was when the US market opened. So the yen carry trade blew up, Japanese market, Asian markets were tanking. And then the moment that the US market opened, you just see Bitcoin rebounding. And I think that goes to show that there is strong demand, especially from the ETFs, where they're relatively price insensitive. And that also applies to Bitcoin being sort of recession proof, because you have large pools of institutional capital that have nothing else to do. So in a recession, I think ordinary people, retail investors, probably are going to have a hard time. But we are seeing pension funds with hundreds of billions of dollars invest in Bitcoin. And that doesn't really change in a recession. They still need to meet their obligations and deliver to the pensioners. And it's the same for every other major institutional investor. They're sitting on piles and piles of cash, and they're going to do something with that. And it's likely that they will put it into Bitcoin. At least that's the trend I'm seeing.
You made headlines earlier this year when you said that Bitcoin could reach $1 million this year, and if not this year, 2025. Do you still stand behind that?
I think so. The market's wrong. Like, Bitcoin is massively undervalued right now at whatever it is, 56,000-7,000 per coin. And again, reiterating what I'm saying, there is just so little Bitcoin out there. You can't double your holdings as a large entity at this point. So it's going to shoot up. The pressure has to be alleviated in other ways. So what I see right now is Bitcoin's like a beach ball, and we're pushing it underwater right now, and people are starting to get bored. Maybe it's intentional, maybe it's paper Bitcoin shorting Bitcoin and pushing the price down, but that is not sustainable simply because there's so much buy demand. Every quarter, Tether is going to be buying Bitcoin. Every couple months, MicroStrategy is buying, Semler is buying, and we're going to see more and more of that.
According to Samson, companies like MicroStrategy, which recently made its largest Bitcoin acquisition in over 3 years with a $1.1 billion purchase, along with Marathon and others that are shifting away from the fiat system by accumulating Bitcoin, will continue to put pressure on the limited supply. Adding to this is the demand from BlackRock's IBIT and other spot Bitcoin ETFs. Recent reports highlighted that last week's cryptocurrency market downturn resulted in global net outflows of around $725 million from digital asset investment products, with $121 million in outflows from the US market alone. Bitcoin ETFs saw outflows of $643 million, while Ethereum ETFs lost $98 million, according to Bloomberg and CoinShares. However, spot Bitcoin ETFs have since reversed the trend and are now seeing consecutive days of inflows. Samson believes this recovery will extend further in the coming weeks and months. According to the Jinan3 CEO, nation-states are the next to enter the Bitcoin market. His firm, which works with governments to accelerate hyper-Bitcoinization, anticipates that sovereign nations will soon begin accumulating Bitcoin as a reserve asset, potentially opening the floodgates for even more demand. Here are additional clips from the interview.
I think I hear that commentary a lot, like why are we at Jan3 working with nation states to implement Bitcoin strategies when you don't want them to have it? But first, a nation state adopting Bitcoin is literally the separation of money and state. It's a voluntary separation, and I think that is a good path to pursue and to advocate for. It reduces the power of the state. It separates the ability to print money out of thin air from the state by them adopting Bitcoin. The second point I would make to that is it is a good thing for price insensitive investors like nation states to get into Bitcoin, because they effectively have unlimited funds to print money with. Like, they can print money. So if they want Bitcoin, I think that starts to solve some of that problem. It alleviates some societal problems too. When we inevitably rebase to a Bitcoin standard, if they start sooner rather than later, then it's easier to onboard, hundreds of millions of people and billions of people into a Bitcoin standard. But the key thing is, like, they will be buyers of Bitcoin once they understand that Bitcoin is valuable and they want it. So that money will just flow into Bitcoin. There's just no accountability. At least with institutional funds, they technically need to get the money from people that invest into them and then deploy it. But a nation state can just turn on a fire hose and inject money into Bitcoin. But also that applies to mining as well. I think nation states mining are also going to be less price sensitive compared to, more corporate company level miners, which might need to sell Bitcoin to pay power bills, but most energy companies are state-owned. And if you see the merger between mining Bitcoin and energy, they do need a base load consumption or usage of the base load. So as it becomes one and the same, that a energy company is a Bitcoin mining company, you'll see less volatility in the market because they're not needing to sell Bitcoin. They're just mining Bitcoin because they have excess energy. But I think we're already seeing the market move away from that with companies like Marathon buying Bitcoin instead of selling Bitcoin. There's no reason at all for a public mining company to be selling any Bitcoin. They should be pursuing the MicroStrategy playbook, which is debt to buy more Bitcoin on top of what they are already mining. But back to the original point, I don't think Bitcoin is incompatible with centralized entities holding Bitcoin because the network itself is decentralized. If Bitcoin is valuable, countries will inevitably want it, just like they want gold and other things. So sooner or later, countries will want Bitcoin. And I think Bitcoin has been designed in such a way that large holders like countries or institutions having Bitcoin does not impact the network itself, because while Bitcoin is in the financial system now, because it is connected through the ETFs, it is still separate from the financial system. So the financial system can drive Bitcoin price short term based on the equities markets or whatnot, but it is totally separate. And like I said before, you can just have your Bitcoin in cold storage. And then at that point, you're totally disconnected from everything. They can do everything they want on this side, issue paper Bitcoin. Hedge funds can short it on derivatives exchanges and whatnot, but you still have your Bitcoin and it's always in your possession in cold storage.
In other news, popular anonymous Bitcoin analyst PlanB remains confident that Bitcoin is still in a bull market, though the massive price surge many are anticipating hasn't arrived yet. Recently, PlanB shared updates on social media platform X, humorously claiming he lost all his Bitcoin during a storm at sea. Despite Bitcoin trading between $55,000 and $60,000, PlanB is preparing to buy more, expecting a big pump to happen much sooner than most expect. He noted that miners are still struggling after the halving, and Bitcoin needs to double its current price to spark the next bull rally. Responding to comments about Bitcoin's unusual price behavior, PlanB explained that this is the first time Bitcoin hit an all-time high before a halving event. He believes the bull market may have been front-run due to early ETF launches and insider trading. According to him, Bitcoin is just waiting for a trigger to explode upward. PlanB anticipates a relief rally that will push Bitcoin out of its current trading range, setting the stage for a larger surge in 2025. He predicts that Bitcoin could reach anywhere between $500,000 and $1 million per coin. Do you agree with PlanB's price prediction? Feel free to share your thoughts on his forecast and Samson Mow's recent interview. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.